Welcome back to the Deep Dive. We're here to cut through the noise and pull out the key insights from the latest data.
Yeah, giving you that shortcut to understanding what's really happening.
And today, we're focusing on Auburn, California. We're digging into the single-family home market using those fresh October 2025 reports.
That's right. Our mission today is really to analyze this shift we're seeing. Auburn had that, market frenzy for years,
Definitely.
but now things seem to be moving back towards something more normal, maybe? It creates an interesting window for strategy.
Okay, let's jump right in then. Price. That's always the big one. What are we seeing?
Well, the median sale price, it's kind of holding steady. Think mid to high, $600,000.
Hmm,
September closings were right around $670,000.
670. Okay. And compared to last year?
That's the interesting part. It's basically flat, maybe down just a tiny bit, like within 1% year over year.
So prices aren't collapsing, but they aren't soaring either. Stable.
Exactly. But while the price itself hasn't moved much, the feel of the market, the friction, that's changed a lot.
Friction. You mean how long things are taking?
Precisely. Days on market, or DOM. It's jumped up quite a bit in Auburn. We're now looking at an average of around 69 days.
69 days. Wow. That feels like a lifetime compared to, say, 2021.
Oh, absolutely. Remember when a week felt long? 69 days average. It's a different world for buyers and sellers now. It was closer to maybe 59 days just a year ago.
So what's causing that slowdown? What's the main driver?
It really comes down to supply.
Hmm.
Plain and simple. Inventory is way up.
How much are we talking?
We're seeing a significant increase, somewhere in the range of 35 to 40% more homes on the market compared to this time last year.
40% more homes.
Yeah, early October reports showed around 300 active listings. So
Yeah.
you put that together, 69 days on market, 40% more inventory.
Buyers suddenly have options
Yeah,
and time.
exactly. More options, more time, and that translates directly into more negotiating leverage for them.
And we can actually see that leverage in the numbers, can't we? Like the sale-to-list price ratio.
We can. Most homes right now are selling slightly below their asking price. That ratio is hovering around 97 to 98%.
So sellers aren't quite getting their initial asking price on average.
Correct. And think about this too. Somewhere between 30 and even 50% of the current listings have had price reductions.
50%? Wow.
Yeah, in a really hot market, you see almost no price cuts and homes sell at or above list. This 97-98% ratio plus all the price cuts, that's a clear sign buyers are in a stronger position to negotiate.
Okay, but help me square this circle. Inventory's up, things are slower. Yet you mentioned sales volume actually increased. September saw more homes sold than last September.
Yeah, about 15% more year over year. It seems counterintuitive at first glance, right? Slower pace, but more sales.
Right, it sounds contradictory.
But think of it like this. Supply jumped massively, like we said, 40%. Normally, that much new supply might cause prices to drop significantly.
But they didn't. They stayed stable.
Exactly, and that's likely because higher interest rates are putting a damper on overall demand, preventing a buying frenzy. So prices hold firm. The increased sales volume isn't necessarily stronger demand. It's more like the market just processing that larger pool of available homes at a steadier, calmer pace.
Okay, so demand is still there. It's just not frantic. It's more moderate, meeting the increased supply, a balance.
Precisely. It points towards a more balanced, maybe more sustainable market dynamic than we've seen in years. Not collapsing, just rebalancing.
Got it. So looking ahead now, the next 3 months, Q4 2025, what's the forecast?
Well, we usually see a seasonal slowdown heading into the holidays. Fewer new listings typically pop up.
Okay, standard seasonality.
Right. Which probably means that days on market figure, that 69 days, could climb even higher through December.
Which could be even better for buyers who are seriously looking then. Less competition.
Potentially, yes. For prices, we expect them to remain pretty stable. Maybe soften just a little bit more. Perhaps a gradual dip of a few percent. We're not anticipating any kind of crash, more like a gentle landing.
Gentle landing, I like that. So for sellers listening right now, what's the key takeaway in this kind of market?
Pricing. It's absolutely critical. Pricing correctly, competitively, right from the start. And presentation matters too, of course.
Because if you overprice,
Yeah, it'll just sit longer. Guaranteed. And you'll likely end up cutting the price eventually anyway. In this market, with buyers being more cautious, especially with higher mortgage rates still a factor, hitting the right price point is paramount.
makes sense. So as we wrap up, here's something to think about, especially if you're a buyer looking to use this seasonal window. How much room to negotiate do you really have on a home that's been sitting out there for say over 100 days.
Yeah. That's where the leverage really kicks in.
Our data shows those listings, the ones over 90 days old, they often sell for notably less than that 98% of list we talked about earlier. That gap, that's your potential negotiating power right there.
It really is a fascinating moment to understand the nuances in the Auburn market.
Absolutely. And if you're thinking about buying or selling in Auburn or anywhere in the greater Sacramento area, navigating this requires some expertise.
Definitely.
We'd love to help you navigate this market with confidence. Visit us at wrspg.com or call us directly at 916-619-1971 to connect with our team at Weichert Realtors Sierra Pacific Group.